Those desirous of meeting me in Bahrain should come on the 24th of May, the Friday. We decided to do an event there because we had covered all Gulf countries and missed out only on Bahrain. Even during my long stay in Dammam, I had never made it across the causeway to Bahrain. So we decided that we'll visit Bahrain. I hope to see you in Bahrain on the 24th of May, the Friday. If you'd like to meet me, kindly message us to the WhatsApp number given below or drop a mail to the email ID given below. Once again, I thank you for your support.
Hi everyone, welcome back to Be Rich. Today I wanted to talk about what's happening globally and what's happening locally with our companies, which we usually discuss about before I get towards the end about particularly what's happening in the US regarding the interest rate. First off, Nifty, if you look at its trading right now, as I'm recording this video, at 22387, which is slightly up from yesterday, is around 50 points up. And Bank Nifty is at 47988, which is around 63 points up from yesterday. And gold is trading around 6,700. And the news which mainly Anand spoke about, which I thought we can even talk about here, is NVIDIA to collaborate with Japan on their cutting edge ABCIQ quantum supercomputer. And that has pushed the shares up of NVIDIA up by 5%. And what is this all hullabaloo about? It's collaborating with Japan to build the nation's hybrid quantum supercomputers. Quantum supercomputers have been making the news for a couple of years now. In theory, it was first thought of quantum computers. The basic concept of quantum computers being superpositioning of particles in quantum state. So when we usually think of a computer, those of you who have studied computer science who have a bit of exposure in computer science know that computer states are usually in on-off, meaning it's 1-0 binary states, right? But in quantum computers, once you reach quantum state, you can have more than two states, on-off states. So this releases a potential of processing high volumes of data at a much greater speed is what it's thought of. So this is the basics behind quantum computers in a nutshell. I'm sure people who are experts in this can give you far more detail, and I'm sure you can Google it up or YouTube it up and see what is there, and if you're really interested to deep dive into it. The question mark still remains, is it viable? Is it doable? So it is still a very nascent cutting edge technology. So we have to wait and watch. If you are one of those people who likes to be in the know and would like to see as an investor where the frontiers of investing in, especially AI is related and computers is related, then definitely you should look up quantum computing and see where it's going and keep that in your radar. But if you're like me and you see lots of opportunity everywhere and it's really not in your wheelhouse, then it's one more thing that's just made the news. But the reason why NVIDIA is partnering with Japan is to accelerate this platform and is promising high performance and efficiency. Lots of things in the past have been promised on high performance and efficiency. So we have to wait and watch to see what this promise is going to be. I personally feel they've been taking a beating AI and NVIDIA stock and in AI related stocks. They're trying to bring something out in the news just to kind of regalvanize the imagination of the investor. I leave it up to you. Second thing which came in the news was about China and the sinking of cities because of urban infrastructure weight. And 45% of China seems to be sinking on its own weight due to extraction of water. And on the back of that, the recent rain which has been happening in the southern Chinese region, creating widespread flooding. And some of the region has seen record rain in the last 50 years. This goes on the back of what's been happening in Dubai too in terms of rain. So climate change is coming and it's here to stay for a while until we humans can figure out how to mitigate the effects of climate change. We've been building up this for years and we've been denying it for years. Now the evidence is not only in the staring at our face, the effects of our ignorance and our avoidance seems to be bearing fruit. So this is something to keep an eye on as an investor too. Though Anand feels still in the early stages to worry about it as an investor on climate change, I feel climate change, especially in the generations younger to me, like my cameraman Karthi and all of you who are 35 and below, climate change is going to have a much bigger impact on you than it does on people like Anand and people who are older to Anand. So I would advise you to learn more about this and find out what opportunities are there related to this in terms of green technology, green companies, and what are going to be happening to your investments, the companies you're looking at or the countries you're looking at going forward. The next thing which I want to hit on was Reliance. Reliance quarter 4 results were out. Revenue was up 11%. but profit after tax is down 2%. You can go through it. The Geo platform, Reliance retail venture performance and oil to chemicals and oil to gas segments and the media business. Of course, Mr. Mukesh Ambani came out and painted a better picture, and he said it's the first Indian company to cross 1 lakh crore pre-tax profit. Yes, but as far as an investor sees, it's not so rosy as it seemed. Things are not looking so great. So keep this in mind. Even companies like Reliance are feeling the pressures of the global economy, macroeconomic pressures, and of course the interest rate cycles, which is squeezing all of us. And Tata and Sons had asked RBI for a special permission or a special reason not to be listed, and RBI has come back asking them to delink bank loans from on lending to group firms. This is what RBI has asked Tata and Sons. The objective is to avoid mandatory listing and to shun NBFC UL classification. So they proposed a solution that involves delinking on lending tag to its bank borrowings. So RBI in turn has instructed Tata and Sons to fully repay its bank borrowings and remove the on lending tag. And Tata and Sons requires 12 to 18 months time to comply with this directive. The loan details are there in the article. I'm sure you can read into it and see. If Tata and Son manages to do this, which I'm sure they will, then they can avoid the listing and RBI will not be behind them for this listing. No matter what happens, like Anand said, Tata and Sons will not be listed. And even if it comes to delinking and selling of Tata Capital, Tata and Sons would rather do that than list themselves. So please do keep this in mind as you're digesting all this news about Tata and Sons. There's still no reason to get excited about a possible listing of Tata and Sons in the foreseeable future as it is standing right now. So it's been making the news cycles for quite a few months now about the pressures office goers are facing in the IT sector, that no more work from home, please come to office, work from office. And TCS seems to have also been in the news about this. And also layoffs which have been going on has been making the news. And one of the ways they're incentivizing their employees to attend offices in full time is always a carrot and stick method. The stick seems to be used this time around, where they're saying if your office attendance is poor, forego your bonuses, is what TCS is telling, because employees with less than 60% attendance at office, or those who have attended office less than 3 out of 5 working days a week, are the ones who are most affected by this. And employees are consistently neglecting the 85 and above office attendance requirement and may be facing action, disciplinary action from the HR within TCS. They've been trying to motivate people post-pandemic to come and work from offices. The problem is during the pandemic, most of us who are employed in the IT sector and other allied sectors came to realize that we can work pretty much efficiently or do even better work sitting from home and save us quite a pretty penny by staying at different locations, not necessarily sitting in a metro city. But post-pandemic, there's been huge pressure from the IT companies, from the government on IT companies, from other sectors like real estate sector on companies, pull us back into offices and keep us there. It also has not helped that few bad apples in these companies have been moonlighting and doing other work and running 2-3 jobs. And that's also led far more scrutiny into this. So all this has come back to haunt these IT companies, and all of them are more and more making it compulsory for people to come back to office and work from office. So this kind of concludes, broadly speaking, what's happening in India and what's happening around the globe as far as the companies which Anand usually hits on. So then I wanted to get to our main topic today, which is about what Fed is doing regarding their interest rate. For a long time, the investors, after the rate cycle hike which happened from 2022 to 2023 and on, when the pause finally came in the rate hike, investors are clamoring, asking them to start cutting the rates. Everyone said the worst is behind us, inflation has been cooled, inflation has been tamed, and central banks were around the world under enormous pressure from investors to start cutting rates. Because the simple reason is rates at these levels have not been seen by this current generation, which means the borrowing cost is expensive, your loans are more expensive, everything gets more expensive, money has become short in supply. So this has been hurting a lot of investors and the general public across the world. But problem for the Fed has been that inflation has been very sticky. Sticky in the sense that it came down and then it started bouncing back up. And that has been the point of contention between the Fed and the investors. The investors felt that definitely this year, in the beginning of Jan, that this year alone we will have definitely 3 rate reductions. And the Fed to their part, did come out in press conferences, after meetings, saying, giving positive signs that yes, we are considering it. Yes, it is a possibility. No, we don't look like we're going to be raising the interest rate. Then it's just around the corner. Then slowly the news of the data started trickling in about inflation in the US, and that doesn't seem to be heading the way they wanted to go. So, what's been happening is from a position of rate cuts and a rate increase being unimaginable, we have reached a position where now the investors and traders in the US are factoring in a possible rate hike itself from the Fed this year. In the beginning of the year, we would have thought it was impossible for such a thing to happen. But now the data is coming out and it looks more and more plausible that we might have a rate hike. And if you look at the 2-year treasury yield for the last 5 months, you can see this of what I'm saying to be very present and very clear. And even recently, one of the New York Fed chairs, Mr. John Williams, the president of the New York Fed, came out and said he feels no urgency to cut the interest rates. And he went on to further saying, if data are telling us that we should need higher interest rates to achieve our goals, we would obviously want to do that. So do remember this. The Fed is not inclined to what investors feel. Fed is not inclined to the economy. The Fed is inclined towards controlling inflation right now. So inflation rates need to be controlled for the simple reason inflation at these levels are very dangerous, and continuing having inflation being sticky is not a good thing for the global economy and especially for the American public. So the Fed may even raise the interest rate is what investors and traders are feeling, and they've started factoring this into their bets against the Fed rate cut, that is. This data is very apparently visible in the options market, which now suggests roughly 1 in 5 chance that the US rate is going to increase within the next 12 months, but up sharply from the start of the year, according to what traders are seeing. This shift has also hit the bond market with interest rate sensitive for 2-year yields, which I was talking about, and the which moved inversely as prices reaching a 5-month high of 5.01%. So Wall Street stock incurred their longest losing streak in 18 months before jumping on Monday. So this volatility which you're going to see in the stock market is going to be there. Interest rates being here is going to pressure the stock markets even more. Now that the AI frenzy is over and what you call the initial excitement as AI is over, you're going to see more corrections possibly in these Magnificent Seven and in the wider market. As far as gold is concerned, we have always said gold and the interest rates have an inverse relationship. And Anand has spoken about this extensively in the video in Money Page, which I suggest you go watch. And he does feel the central banks around the world, which are gathering gold at quite a fast pace, has slowed down, especially the Chinese central bank has stopped consuming gold the way it was consuming before. This could be one of the reasons why we're seeing this recent gold price correction. Till such time the interest rate starts cutting, the Fed starts cutting interest rates, we're going to see gold at these levels or even crawling back up a little bit more. So this is where we stand as far as the interest rates in the Fed are concerned. So I hope you found this video informative and entertaining as always, and I'll see you in the next one soon. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.